Let's strip the name away for a second. Ignore infinite banking, the infinite banking concept. Ignore insurance. This is really about how money flows. What if the biggest difference between people who struggle with money and people who don't is simply where their money sits between uses? Money comes in, money goes out. When you spend it, it's gone. It stops working and you start over. Some examples of this is paying cash, paying down debt, pulling money from investments, and locking money in accounts you can't touch. What happens to compounding when money has to reset every time you use it? The infinite banking concept changes the order. Instead of earn, spend, start over, it becomes earn, store, use, replace. The key point here is that money has a home before it's used. What if spending money didn't mean killing its growth? The money is stored in a place that keeps growing, it stays accessible, and isn't tied to market swings. And when you need money, you borrow against it. You don't liquidate it. Have you ever noticed how banks never spend their capital? They lend against it. There's no interruption to compounding. It's less volatility exposure, and there's more control over timing and fewer forced decisions. What does uninterrupted compounding look like over decades instead of just years? This is not free money, a loophole, a hack. It's a system, one that rewards discipline, long-term thinking, and consistency. Why do people reject systems that work slowly but reliably? Most people never learn this because it's not exciting. It's not flashy. It doesn't benefit the banks to teach it. It requires a shift on how people think about money. If this way of thinking works best over time, who benefits from people never learning it? Infinite banking isn't about insurance. It's about controlling the flow of capital, keeping money working, and reducing friction and leakage. If we could do this with clamshells, that's what we'd be talking about right now. What would change if you stopped resetting your financial life every time you spent money? This is where people usually say, but insurance is a terrible investment. And that's a fair question, and it deserves a real answer. What if insurance isn't an investment at all, but something else entirely? In the next video, I'll explain why calling insurance a bad investment misses the point, and what role it actually plays in the strategy. This isn't about magic, it's about structure.